Hey, what's going on, everybody? Today I wanted to talk about financial advice for life. I invest, and that's my main thing, and I want others to increase their wealth through investing. But if you don't have these three accounts, you're not going to change your life, right? You're driving without a seatbelt, and you might be fine for a while, but when life hits you, it'll throw you through the windshield financially. And here's the worst part: most people never even hear about this until it's too late. I talk to people all the time, make 40,000 a year. Some make 6 figures, and they all tell me the same thing. I'm working hard, but I never get ahead. The reason isn't always the income, it's that their money is all in one big messy pile. No boundaries, no structure, no plan, which means when an emergency happens, they panic. When a good investment opportunity comes along, they miss it. And day to day, they have no idea what they can spend without guilt. Today, I'm going to give you three account setups that will give you clarity, control, and confidence with your money, no matter how much you make right now. First, the emergency fund. This is your seatbelt, your airbags, and your parachute all in one. It's 3 to 6 months of expenses sitting in a separate savings account ready to use. And here's the thing: it's not there to make you money, it's there to make sure you don't go backwards when you get punched in the face by life, because that's going to happen, guaranteed. Your car breaks down covered, medical bill breaks down covered, you lose your job. You buy yourself 3 to 6 months of breathing room to make smart moves instead of desperate ones. Keep it in a high yield savings account, easy to access, but not too easy to spend. Treat it like a glass box with a hammer, only break it in an emergency. I personally use SoFi. If you want to get crazy, I'll keep a year's worth of emergency fund savings just because I'm the entrepreneur, right? I don't have a job that I go to 9 to 5 to give me that guaranteed paycheck every month. So if you do have a job, that's totally fine. I talk to most people I talk to with investing, they have a 9 to 5. Whatever you're comfortable with, I would say 6 months would be the best number. If you have $0, just get to $1,000 emergency fund and pay off all the debt you can, excluding your house. You got a car payment you can have. I'd rather you not have one, and preferably less than 20% of what you make a month goes to your car. You want to keep your living expenses 50% under, 30% for guilt-free pleasure, and 20% to invest. Or 20, the more you can invest, the better, right? Because we want to build our account, we want to build our wealth to escape the matrix of working 9 to 5 or whatever freedom you think about in your life. It's going to come from your investments, your assets, not your liabilities. We already got the emergency fund. The second is the investment account. This is where you plant seeds for your future you, your family. And if you're starting from scratch, here's my rule: focus on cost investment like index funds or ETFs. A lot of people say, "Hey, I have $100, I have $1,000, I have $5,000." You can do options with that, but you're doing yourself a disservice. I I only work with people that have above 25,000, because then you get rid of the whole pattern date trading, and you have a margin account where you can do multiple trades and just 3 trades a week. I rarely work with people that have less than that, because you could just make more money by just buying a stock, right? You could do the SPY, there's all kinds of ETFs out there, triple Q, whatever you want. But get into either an ETF, or if you're risk, you could just buy one stock and potentially double your account or get 30 to 40% returns just doing that. This account is not your emergency fund. It's not for your next year's vacation. It's for building wealth over decades. And yes, you can start with $50 a month. The amount isn't the magic. The habit is, because when you invest every month through good times and bad, you start compounding. And compounding is how you regular people get rich slowly, which is the safest way to stay rich. Keep this separate from your day-to-day money so you're not tempted to borrow from your future. So if you see my other videos, I was in the Navy for 8.5 years. And that's where I built my nest egg in investing. And I also had a side business with my wife. And we're both very evenly yoked. Okay, we're not out blowing money, garbage that goes, and just things of the world, things that are not going to move the ball forward. We're not doing that. We're not racking up credit cards on stuff that nobody cares that we have, because a lot of people buy stuff to impress people that don't even like them. So you have to understand, what is the 5-10 year goal here? Where do I want to be in a year? And put those systems in place so that somebody, I like systems, I like discipline, that I don't even have to wake up and think about what I need to do. I already have a system in place that's going to get me to my 5 to 10 year goal. And that, if you do it in finance, you can do it with the gym, you can do it with everything in your life. Financially, we want to escape the 9 to 5, or we want to escape the debt. We want to get out of debt. We want to be free. That's what got me on this whole journey. I wanted to have control of my life day to day. I wanted to be financially free. Is how do you get to that point of doing what you want day to day? Now you have the third account, your everyday checking account. This is the money you can spend without guilt: groceries, gas, date night, hobbies, whatever fits your budget. Why have this separate? Because it's your permission slip to live your life. Too many people feel guilty every time they swipe their card because they're mixing bills, savings, and investments all in one place. Keeping your spending money separate, you can enjoy it guilt-free because you already took care of the important stuff first. In Robinhood, it's like a bank, right? You have your investing and you have your spending. I actually spend from my investment account. People are like, well, what about capital gains tax? This is my full-time job. There's a thing called a trader tax status, where you only pay taxes on the percentage of your earnings for the year. So whatever tax bracket you're in, I'm at 22%, so I'll have to pay 22% of my earnings minus itemized deductibles. Let's say my office space, because I work from home, and any losses, you can take that away as well. So I'm not paying capital gains on this because of the trader tax status. Look into it if this is something you want to do full time. I personally, right now, this is what I've made for the month: $19,207 since August 1st. In 10 days, I made that. I know that's a lot of money. That's actually more than I made last month. Last month, I made 18,425, which, yes, is a lot of money. I'm doing well with these trades in mind. Getting a little off topic, those are the 3 accounts that you need that will work: emergency fund, investment account, everyday checking. Now, living expenses, keep under 50%. That's in house, groceries. That's your survival buffer, right? 50% of your income is living. 30% guilt-free pleasure. If you are in debt, that 30% of guilt-free needs to be like 10% or 5%. I know not having any fun is off the table for me. You need to get out of debt as soon as possible. And then the rest you need to pour into investments. 50% living, 30% debt or guilt-free pleasures, and then 20% to your investment account, which is your savings account, in my opinion. And if you don't have the savings account, build that up. I would do 10% investing, 10% savings. That's just personally what I would do, and it's worked for me. So if you want me to walk you through exactly how to open these accounts with the specific banks and brokerages that I recommend, you can direct message me on any of my social medias. It's the same as my YouTube username, thexavierdearco. I'm on right here on YouTube. So I'm actually currently building a free beginners market starter kit. So be on the lookout for that. It's a step-by-step, and you can start within a couple weeks. And I'll also be rolling out a stock market beginner's guide, intermediate and advanced. If you want to be a part of a Discord community, we'll have weekly calls, or even one-on-one coaching. I do offer those. So if you are interested, you can get with me. That's it for me today on the investing topic. I know it's a little bit of a basic video, just 3 accounts that you need to have before you start your investment journey. Now, I'll give you one little trade before we close out the video. This is something I'm looking for tomorrow. As you can see, I usually sell options, but something I've gotten into recently is buying leap call options, which is a long call option, preferably 6 months at least out, but I usually buy about a year out. And it's the same thing as selling a put. Right here, as you can see, I have Apple leap call options. These expire January 2026. The cost when I bought them was 1665. So that's times 100, so $1,665 a contract, which I know is a lot. But the point of this is you have from right now I have over 4 months until this expires. So what I want this to do is I want Apple to run up. Right? The higher Apple goes in price, the more the contract is worth. And you can actually make a lot more money doing leaps than if you were to do selling puts. Because with puts, if I were to buy, or if I were to sell 100 uh, shares at 230, that would be 23,000. So a lot of people don't have 23,000. A lot more people will have $1,600. So this is a good strategy for those with a little less collateral or a little less capital to use with the leaps options. And with leaps, make sure you do your due diligence on what companies you're looking into. See, here's my options right now. I have Apple, Applied, APLD, Meta, Oklo, AMD, and another APLD. So make sure you do your research on this. The Greeks don't really matter as much to me. What I'm doing is buying slightly out of the money strike prices. So for example, this one is a $15. So that's $1 out of the price. So in 4 months, I think APLD is going to be above 15, substantially above it. So that's how I do leaps, and I do a lot of research before I buy any of these contracts. I'm not just gambling with my money. That's not how stocks work. That's not how options work. You have to understand what you're doing. You have to understand the investment, just like you understand the accounts that you have day to day, emergency fund, checking account, investing account. You need to understand what you're doing with your money. You need to be intentional. You need to be looking at it every day. If you were to lose weight, you step on the scale every day to see how much weight you're losing. You have to become obsessed with your intention to grow your accounts, to grow your wealth, so that way you can help others with the blessings you've. So that's all. That's it for me today, guys. Make sure to comment, subscribe, and thanks.